What's up, guys? It's Paul Salazar at Hilton and Hyland Real Estate. Today, I have Mark Medina. He is California Title's Vice President.
Yes.
And we also have Bill Thomas here from California Title. He's the Advisory Title Officer. Thanks for coming, guys. Mark, how long have I known you for?
15 years plus.
15 years plus. Long time, brother.
Good deal.
We've ridden motorcycles together.
We have.
We've had a lot of transactions together as well. And as well as Bill. I haven't met you in person, but we've talked on the phone many times.
Many times.
And the reason why I wanted to bring you guys in here is we want to make this video for buyers and sellers, but mostly, I guess, buyers out there, right, that want to know more about why are they getting title insurance? What does it mean to get title insurance? What are the issues that they're looking for on prelims, right? So let's give a little bit of a background about your title experience, and then we'll go over to Bill.
Well, I've been in title for about 30 plus years, so I'm going to keep it at the plus years because then I'll start dating myself. But as far as title...
You look good, though. You look young.
You see me age, that 15 years you put on me.
So. You look the same, man. You look the same. You look good.
So, and basically what I do is I'm a sales rep for California Title Company. And basically I go to real estate agents like you and ask for the business and see what we can do to help you. In your business, as far as what your buyers needs, and what we're getting into today is talking about what buyers needs is basically title insurance is done this way. The seller pays for the buyer's policy and the buyer pays for the lender's policy. Simple is the way it is. So what we do is make sure that the seller passes free and clear title on. So my job is to get the preliminary title report ordered from the seller and review it and make sure your buyer is getting passed on free and clear title in a nutshell. And that's kind of what I kind of do when we get the ball rolling and making sure that the buyer has everything that he sees on the preliminary title report that can be passed free and clear.
Yeah.
As far as that goes, but
so you basically work hand in hand with the agents.
The agents,
right? Usually sellers, agents, listing agents like myself that work primarily with sellers, because in a typical transaction in California, in a typical market, the listing agent picks the title for the most part.
Of the time.
Yeah. I mean, it's negotiable, right? And then Bill, you have the knowledge of what's going on. So just talk about your experience with title.
So I've been in the business for 36 years now.
Okay, all right. So he is aging himself.
Yeah, I am. Myself,
I like it.
But my current role is I'm the Los Angeles manager and the advisory title officer for all of California Title Company. So my role is to go over transactions with the title officers that are challenging, or maybe an issue where it was how do we resolve it, how do we insure it, what obstacles do we have in front of us, how do we get around them, can we get around them. That's basically what my role is on a day-to-day basis, dealing with the other title officers in the company. We have 3 title officers because we have 3 branches, so each branch has a title officer. I get to deal with them all day long.
Okay, sounds good. So you're in charge of reviewing the preliminary title report?
Sometimes. Actually, my job is to review the work of the title officer. The title officer is the one who actually does the reviewing of the preliminary report.
Okay, gotcha. So you're above them.
Correct.
And you're making sure that everything goes smoothly. That way you don't, the buyers don't go back to California Title and say, hey, there was an issue with title that wasn't resolved when I bought the property. Is that right?
Right, if there's some type of claim that they're thinking they have against the title policy that was issued,
Does every transaction have to have a title, have to have title insurance?
Unless they're paying all cash, the buyer doesn't have to buy title insurance.
Well, so there's owner's title policy.
Yes.
Because on the purchase contract, you have the owner's title policy, which is usually paid by the seller.
Yes.
And then you have the buyer's lender's policy, right? Which is usually paid by the buyer.
Yes.
Okay. In an all cash transaction, there's no buyer's lender's title policy. So the buyer doesn't have to be, I guess, in charge, or they don't have to worry about paying for their own title policy.
They don't, but they still want to make sure that whatever we're sending out, like in the preliminary title report, that we review and go through, that is passed and everything's on there, because there's things on a prelim that would be an easement, certain issues that could hinder if it's a builder or something like that. from them purchasing the property. So that's why they want to review it, or we want to review it with them to make sure that there are no defects on what they're purchasing. You see what I'm saying? That if there's maybe a prior encroachment, or maybe if there's something that needs to be resolved. So that's why, even though that they're not buying, they still want to make sure everything is handled and cleaned up before they actually close, which is what we do.
For sure. I think in every single one of my transactions, there's always been a title policy. But I was just curious if there's ever been a transaction. I guess there can be if it's an all-cash transaction,
Right.
where you don't have to have an owner's title policy. But it doesn't make sense not to have it. It's not like it's super expensive compared to what you're paying for the house.
Right.
And the policy premium is based on the purchase price.
Correct.
Is that correct? Okay.
Correct, and it runs anywhere between $1 to $3 per thousand in the transaction. So it's minuscule compared to the transaction, like you said.
Yeah.
And the amount of coverage we give with that small price is something you can go to sleep with and say, okay, I'm covered. Someone's got me. So to go into a transaction without title insurance would probably not be advisable on my end, because remember, we're not only insuring against the current seller's liens, against the former seller's liens, anybody who's been on title at one point, like maybe grandma gave the property to the daughter and granddaughter, and now the granddaughter's selling it, but grandma was in trouble at one point, so she has all kinds of liens. So we're clearing all that up through our insurance process, and we're going to protect against that. So if a buyer comes in and say grandma did have a lien, and then he bought the property or she bought the property without any kind of title insurance, they're not going to have any coverage. So I always say it's always advisable to buy insurance. Of course, that's what I do for a business, but for the amount of money you're putting in for your house and the amount of money you're paying for the title insurance, you really want that title insurance policy to be behind you.
Yeah, no, I agree. I was just curious to see if there was any, I've never heard of it before, but I was just curious to see if that was even a thing. All right, so let's talk about, we kind of talked about what you guys do, right? So let's talk about the preliminary title report, right? Because it's kind of hard to understand what's on there. There's always 5 to 10 items on there. It'll show any liens, right? So like mortgage liens, multiple mortgage liens if there's more than one mortgage. It'll show property taxes that are due. It will show easements. It'll show encroachments. It'll show mechanics liens, right? So mechanics liens are
actually a lien claimant, somebody who's worked on the property and they haven't been paid. So all of a sudden they're saying, okay, I haven't been paid, so I'm going to file my mechanic lien. So I want to get paid. That's their lien that the lien claimant is actually.
It could be a gardener, it could be a contractor, anybody that's working on a property and they haven't gotten paid, they can put a lien against against title to get paid
against a property. Yeah. And the thing about mechanics liens, they're 90 days. So they have to be renewed every 90 days. In fact, if it wasn't taken care of, correct?
Yes, they have to actually start the foreclosure process to enforce their lien in the courts. So if they don't get paid within 90 days, then they have to enforce their mechanic lien before the 90 days expired. Otherwise, that mechanic lien's gone.
Oh, really?
Yeah.
Okay. So it's a long process for, say, like a gardener that hasn't gotten paid for a year and they're owed whatever $1,000 or anyway whatever it is.
Right.
For them, it probably wouldn't be worth it to go down the whole process of getting paid.
Probably not the gardener. Yeah.
Yeah, but like a contractor,
yes, a roofer,
a pool.
right,
yeah. Okay.
something
Gotcha.
like that. Where there's a value to it. I mean, not saying that the gardener isn't of value, but bigger contractors, bigger items.
Okay, so we talked about the importance of the title policy for both a buyer and also a seller, right?
Yeah.
Like, what is there an added benefit for a seller to get it compared to a buyer? Is it for the buyer not to sue the seller? Is that the benefit of a seller of an owner's title policy?
Well, to be honest, the seller doesn't get any kind of protection.
Okay.
But the benefit is, if we do the title insurance, the lawsuit, if a buyer does instigate a lawsuit against the seller, it comes to us first, and then we have to resolve it. So keeps away the seller and the buyer from suing each other, kind of thing.
Okay, so it does protect the seller.
Right.
Yeah. So the seller does get protected, but the insurance is for the buyer.
Correct.
Okay, but it's called the owner's title policy.
Right. And so the owner is meaning that the buyer who's going to be the owner.
Oh, got it. Okay. And how long does that policy last?
For as long as they owned it.
For as long as they own it.
Yes.
Yes.
Okay, got it.
And you only have to pay one premium. So
Which is right during
the
the transaction.
Right.
And what are the amounts that you guys cover? It's like in the millions, right? Yeah. So what is it like?
So
Give me
whatever-
an example.
So whatever you sell, if you sell a $14 million home, we're
Okay.
insuring the $14 million. If you sell a $500,000 home, we're insuring the $500,000 home.
Okay.
So whatever the amount of the sale is,
That's
we're
that
insuring that
policy.
amount.
Okay.
That's why the cost is higher, obviously. You know,
On
because
the higher price homes,
Yeah.
for sure.
Yeah.
Yeah, 100%. It's like if you're driving a Lamborghini compared to like a Ford,
Right.
then the price is different. Okay. What are the differences in between an owner's title policy and a lender's buyer's policy or like a lender's policy?
So the owner's policy is directly for the buyer.
Okay.
They're the ones that you're going to get an owner's policy tailored to the buyer.
Okay.
The lender is going to get their very own title insurance. They're going to say, hey, I'm going to lend to you. So title company that you're going with has to give me a title policy. It's at a discounted rate when you buy an owner's policy, and then you get a lender's policy. So there's a discount.
How much less?
It's about 70% less.
70%
Yeah,
less.
they get.
Oh, okay.
Yeah, they get about
Save a lot.
70% less.
So every lender requires that.
I would say every institutional lender.
Okay.
Some private party lender like dad lending to the kids might not want that, but
And you still want to get
Yeah.
it because, and here's the reason why you have the lender's policy. God forbid they go into foreclosure and then the lender gets it back and becomes in first position. So that's why you have the lender's policy. So
Okay.
if something happens to the property where it has to be taken back from the lender, they're able to foreclose on it and become in first position. So that's why you get the lender's policy.
Oh, I see.
That's why dad may want that policy. You never know. Kids.
So that lender's policy is for the lender.
right.
Yes.
Is to insure the lender.
Right.
Ah, okay, gotcha. See,
Correct, Mr. Thomas?
That's correct.
okay, that sounds good. Okay, what types of policies are out there?
So there's several different kinds.
Okay.
So, the most two famous one are the owner's policy and the lender's loan
Yeah.
policy. But there's also trustee sale guarantee policies. There's parcel map guarantee policies. There's also subdivision guarantee policies. There's even easement policies.
Mm-hmm.
But there are different type of policies out there. I mean, probably too many
Survey.
that we could too many we could count on. But there's also an extended owner's policy. It's a form of an owner's policy where you present a survey to us and we guarantee the survey is correct and we insure that as well. But the most typical policy is the auto homeowners policy, which already gives you fantastic coverage. You don't even need to bring in the survey. So
okay.
yeah, so there's several different kinds, but those are the two most
Right.
common is the auto homeowners and in the lender's policy.
And
Okay.
a lot of times what we deal with around here is people want to insure the survey. And actually the homeowner's policy is better coverage because it covers different matters as to where a survey, once you give us that survey, we're insuring exactly what that survey says. We're not insuring anything extra. And if we find defects on the survey, we've got to report them out. So that's why when people say, oh, we have to have a survey and you get into situations like that, I say just get the homeowner's policy. And if there's a claim or something like that, then you work it out then. And I mean, that's what I say to most people in our industry. Plus the cost is a lot more. So,
Really?
yes.
So if you get a survey for a property, because look, most houses I would say, especially like in LA, like not in the hills, right? Because the hills are, you get all kinds of stuff going on in the hills. But if you're not in the hills and you're like in a grid, like say in the flats of Beverly Hills or in Santa Monica, like north of Montana, or in a lot of parts of LA, you don't really need a survey. Most buyers don't get a survey. It's also really expensive, like $2,000, like minimum, just to get a survey. But I've had buyers, especially the ones that are being represented by an attorney
Or business manager.
or a business manager. They want to get a survey. They want to spend the money to make sure everything is fine, everything looks good. So when they get a survey, if they get a survey during the escrow process, do you guys have to insure that survey, or does it have to be delivered to
It
the?
has to be delivered
It
to
has to be
us.
delivered to you
Yes.
guys. Okay.
If we're going to insure it through the survey. If they want to go to the survey just to, maybe they're doing construction or they're going to do construction in the future and they want the survey just to lay out the land and see it that way, because a lot of it, maybe it's a topographical survey, how the property will be in the future. That's why they might want to get that. A lot of times we get surveys and then they want certain endorsements to ensure other things that can happen to the land. Is that correct?
That's correct.
Yeah.
Yeah.
So that's why they get surveys just to have them, and not necessarily insure with them.
For sure. So let's not change topics, but let's go into the different issues that we see in the prelims, because whenever I am doing a transaction on the buyer side, and I get a prelim, I always send it to you and I say, hey, how does it look? Does it look good? Are there any red flags? And so what are the typical red flags that we should be looking at in a transaction besides like liens, right? Like liens are really important. I think they were probably more important back in the Great Recession when there was, the liens were at a higher amount than what the property is worth. And then the seller has to come in with cash or renegotiate with the lender at a reduced price and do some kind of short sale, right?
Right.
But besides liens, what are some like red flags to look at in a prelim?
I think you want to take a look at uninsured transfers. When we mean uninsured transfers is a title company hasn't vetted a deed that has happened in the past on the chain of title. So you want to take a look at that. And that could create a red flag because former owners that have transferred title could have several liens against them. Remember I talked about us not only insuring the current seller against their liens, but we're also the former owners. So that's one of the big red flags that we see a lot out there. If there's uninsured transfers, we want to take a look at it. If it's coming out of a trust, you want to kind of take a look at it, make sure there's no beneficiaries are going to come back and say, hey, wait a minute, uncle left me, 5% of the title. So, we kind of want to look at all those things. When you see uninsured transfers, that kind of like all of a sudden, okay, yeah, let's take a look at it.
And we'll talk more about trust because I think that's really important. I think when you're doing a trust sale, it's a little bit more complicated, right?
Right.
There's more parties involved. But what other things? Obviously, there's encroachments, there's easements. So let's talk about some easements.
Taxes are paid, simple things like that.
Taxes are paid, yeah. And we're talking about not only property taxes. But we're talking about any other tax, right? Because like if you haven't paid your income taxes, the IRS, they'll put a lien on your property.
They want their money first.
Yeah,
they come first.
Yeah.
So those are important ones. That obviously if the house is over encumbered, that may be a problem. And we've seen unfortunately child support liens, stuff like that. These are things that everybody gets paid first. So those are the important ones. Child support, IRS liens. The deed to trust, obviously, and like we were talking before about unrecorded deeds, if those are also without insurance, like if a brother gives it to mom and mom gives it back to the brother. Is
that like a quick claim deed?
Yes.
Okay, so that was another question. So those usually are not done with title insurance.
Right.
You just notarize a quick claim deed. I give it to my son.
Right.
What's the issue with that?
Well,
okay.
A lot of times,
okay.
A lot of times those deeds aren't legit, so there'll be a fraud or forgery. Yeah, we currently have a claim with. Well, we have many claims like that, but we currently have a claim where, son acted like he got the property and he sold the property under his father's nose, unfortunately. But
wow.
That's why we vet those deeds, because a lot of times they are not legit. So a lot of times,
and these are recorded deeds.
Yes. The county recorder doesn't look at its validity of that factor. They look at it, is it recordable, and that's it. And they'll just record it.
Which is it notarized by somebody who has got a licensed notary, and that's it.
Correct.
And you got a signature. It's wet. That's all they need.
Or whatever, and any notary that will notarize you, and just walk in and say, I want that, and that's what they do. They'll kind of vet you with the driver's license and some ID and a thumbprint, and then, especially if it's a father giving it to the son, supposedly, that's not questioned. But we've had transactions where people just are deeding, back and forth, and we don't know if it's to avoid certain things.
That's another thing, trying to avoid liens. Yeah.
Right. Yep. So what they'll do is if they have a judgment and the dad knows it's coming, they'll deed it to the son, which is not okay as far as title insurance goes. I mean,
I didn't even think about that. Like that. So I own a property. The IRS is coming after me.
Your tail, right?
Let me give the property to my son so they don't lien me or lien the house.
Right.
Oh, okay. Interesting.
Yeah, because if they see those dates transferred, that's not a good thing. We don't like to be involved.
We're not giving anybody ideas here of how to not pay your taxes, okay? No,
we'll get you.
Yeah, seriously. The IRS, the government will definitely give you. Uncle Sam is out to get you no matter what, for sure.
Pay your taxes.
Pay your taxes and you're fine, yes. Oh, okay,
good
that
to
sounds
go.
good. Okay, so let's talk about easements. What are give me some stories about easements that have been an issue in transactions?
I could definitely tell you some.
Okay,
So,
yeah, give me a couple.
we had a transaction whereas Southern California Edison had placed power lines in an area where the homeowner had owned the property and they sold it. Unbeknownst to us, there was an actual old recorded easements. I mean, we're talking about in the early 1900s. So Southern California Edison wanted to take the above ground power lines and move it into the ground, into the person's land, basically. So of course we got a claim with that because we didn't actually see that old easement. So
You didn't see it?
one. No, because it
Where-
was recorded so old and
Prior to
the plant
times,
time,
right.
and it was
Gets
just one of those.
missed.
Yeah, it just
That's why you
happens.
have title
Yeah,
insurance.
that's why you have title insurance. So we had to handle that. We had to get that easement moved. We had to pay quite a bit of money to get that easement moved, but we did get it moved.
The insurance company had to fork up money,
Correct.
because you guys didn't find that during the transaction.
That's correct.
Gotcha.
It came
Because
out.
when you guys do a prelim, what does that process look like when you guys are trying to get information for the preliminary title report? What does it look like? Is it you guys have like investigators and go out there, you go to the city, or like how does it work?
Kind of close. We
Yeah,
kind of have.
and we have a local. The great thing about us is our plant is local. A lot of title companies are offshore to where they'll give you little bits and pieces where our searchers are, and a lot of times, and Bill and I go through this, they're too good. They find everything. They go through. I mean, maybe they missed that one, but most of the time they find things that like, why did you even show that? It's a 50-year-old deed of trust or whatever they showed. So we're fortunate that we're able to. Bill is the one that would get on top of that to show what's available if there's an easement that wasn't recorded, stuff like that. And
So okay, so
we
let's.
have-
I give you an address, 123 Main Street.
right
What goes on behind the
there
scenes?
you go.
So what happens is you give us the address and we go ahead and we have 3 search engines that are involved in our searching. So we got one which is a tax assessor search. So your property address shows up with the tax assessor. So it gives us an assessor parcel number and then a legal description that goes with it. So we'll just say lot 1 of tract 1, 2, 3, 4, 5. That's the legal description known by the county recorder. So then we have a county recorder search engine. And that's where all the records that are recorded against the property all the way from the beginning of time get put into, and we have
It's
that
all
database.
digital now.
All digital.
Okay.
All digital.
That's great.
Yeah.
Okay.
And then there's also a general index search. That's the one where the federal tax liens pop up, the state tax liens pop up. So if it comes up under Mark Medina, we're going to look at every single Mark Medina and try to make sure that it's not to this this owner of Mark Medina, and then either show it or don't show it. But that's the whole search. So then they're going through every single document that goes against the property and see, does it actually affect the property at this time or does it not? And then it gets depicted onto the preliminary report, gets sent off to Mark, gets sent off to the title officer, it gets sent off to you,
Okay.
and then that's how the process starts.
All
rolling.
right, cool. Yeah, I didn't understand like how that process looked like, but it's all internet investigation nowadays. I mean, obviously before the internet, it probably took a long time.
Yes, they used to pull a document at a time through microfiche.
Microfiche.
Yes,
Wow.
And they used to go and print the documents.
And that would take
then
a
look at
while.
them. Oh, yeah.
Now it's like we get them back in 24, 48 hours
Yeah.
on a rush, obviously.
Yeah.
Okay, that sounds good.
So
Okay.
it's kind of cool that
Digital
how
age.
quick-
Digital
Yeah,
age.
yeah, which is great. Which is great. Things are moving faster.
Yeah.
You know. Okay, that sounds good. Some other questions. Okay, so we talked about the easements.
All right.
How about encroachments? What's the difference between an easement and an encroachment?
So an encroachment is when you have a piece of property and something you have like a structure, like let's say beyond a fence, maybe your part of your garage is built onto someone else's house. That's an encroachment. Easement, of course, is say you do have that garage that's built over that house, but the next door neighbor said, I'll give you the right to it. You can actually build it there and you maintain it. That's an easement. So you have a right to actually occupy that space and maintain it and such forth. Now, there's different kinds of easements, of course. That's that I just described as a private easement, but there's also easements for SoCal Edison, public utilities, sewer easements, Department of Water and Power. All those easements exist, and it's a right for those people or those
Access.
entities to be able to maintain or actually occupy the area. It may just not be for you as a property owner that you're getting electric, water, or sewer diffuse. Your other owners that are on the community also have that right to use that. So they got to be able to go over that right to that easement area and then actually be able to maintain it. So if there's a problem with the power, then they got to go be able to actually get into that line and then maintain it.
Yeah, and I've seen that before, where like if you're like on hillside property and you have a sewer line that goes underneath your house to somebody else's house to a street down below here. It's a long sewer line, and that sewer line is underneath another person's property. You have to have an easement on their property for you to access that in case something happens.
Yeah.
Correct.
Yeah.
Yeah, so that would be like a sewer line easement. Like most
Okay.
easements, if you see the utility poles across the property, it's a 5-foot easement. You could basically call it that, correct?
Yeah, the common
Yeah.
easement is in the 5-foot area, but
Right.
it could be anywhere like
Yeah.
Paul just described.
That's different.
Yeah.
That's right down the middle or
Yeah,
off.
yeah.
Generally, it's off to the side, or if it's running
Sure.
along the driveway of the neighbor or something like that. I don't think they. Back in the day, that was more so that where they just ran the sewer line wherever it connected down to go down the hill. But now they, would run along the driveway or what have you. Something.
Yeah, because if it's running down the middle of the house, then you're screwed. I mean,
We've
that
seen
would
it.
not be
We've
good.
seen
It happens.
Oh no, I
sometimes.
know,
Hillside
I know.
properties have
Oh
them,
really?
so
Yeah,
they do.
for sure.
So.
Okay, so there's also what I've seen on a lot of preliminary title reports is just really old stuff, 100-year-old documents in there. It's like handwritten. It's like calligraphy. Why are those still on title?
Well, they don't expire. So, for the most part. And, back in the day, they didn't have the typewriter or whatever. So you're right, calligraphy, handwriting. And they had books and pages, and that's how they described them instead of an instrument number. So if a developer at that time, maybe in 1906, was creating a piece of property and they wanted to have symmetry to the property, they would make a covenant condition and restriction. And of course, they would handwrite it out, right? And then if there's no expiration to it, then it continues to exist. So even an easement too, so maybe they reserved an easement for, the utilities companies to be able to place their easement, like Mark said, in the 5-foot area of the property, then, it would be handwritten out as well. And unfortunately, those don't expire. And we have to live with that because it is on a book and page already that exists. Of course, the good thing is they got snapshot and put into a digital, delivery. Or
Is everything now digital? Are there
just
still
about,
okay?
just about.
Gotcha.
Not everything just yet. There's some older stuff they're still working on that, but pretty
There's-
much everything's just about digital.
Yeah, there's still stuff that we have to archive, that we have to go send someone down to the county recorder's office and actually pull the document up from
Really?
the book. And I've been down there myself, and they're archived down at the bottom floor, and you look through these books, and they're handwritten
dungeon back
names.
there.
It's pretty cool. I mean, I've done that a couple times in my career, and it doesn't happen very often. But someone had to have who signed this document, when they wanted, who owned this at a certain time. So those are the old documents that are archived down at the city, and you can still find those. I mean, or maybe if they're now building, the property's so old, we need to find that covenant agreement if we can't find it or show it on the prelim, because those documents are dated so long ago. So they need to verify and make sure. So
But I also seen some of these that you guys were just take off. They're like, okay, we don't need this anymore. And so what does that mean?
we eliminate them just like that. No,
You're just like, yeah, done. I don't need that. Bill's like having, no, you can't do that.
No, that's how the technical
Yeah.
right? So what happens is a lot. Like I said, if it expired, we'd remove them. So some have a date, an expiration
Right.
date. They'll say they'll last till 1955 or whatever. And there's been no renewal of it, remove it. But a lot of times they just show up on search packages and because nobody reviewed the actual expiration date. So we just then all of a sudden we get context, like you said, why is this thing on there? It's so old, and take a look at it, it's like, yeah, it shouldn't be. It's expired in
Expired 10 years ago.
1955.
Yeah.
So
Still
that's how
showing
they get
up.
removed if they expired.
Okay. All right, got it. So we talked about liens. We talked about encroachments. We talked about easements. I've seen, oil rights, water rights. The oil and water rights, that's always confusing to me because those are all really old.
Yeah.
So what does that mean? This is like wells or like what does that mean?
It is, and Bill's probably better at explaining to me. But it's like Standard Oil that had a lease under all the land around here, and it was what 500 feet below the property, and they could be drilling, wherever their plant is or what have you, and going below. So that what they did is they gave the leases to the original homeowners. Is probably who it was
Well,
granted
the
to.
original
The
homeowner
lease.
would have given the lease to Standard Oil
Right,
to be able to extract those oil and gas minerals.
Right.
And basically, not an oil rig will be on top of the property, but they'll be from miles and miles away, slant drilling underneath the ground and extracting it and replacing it with water and such forth. I think it's kind of hasn't happened as much as it used to, but it was a very oil-rich area, LA County. So there was lots of oil.
So that's what it was. They weren't really looking to directly drill on your property, but they were using slant lands, like you said, to access stuff underneath your property.
Correct.
Because what do you own? How deep do you own land? Is it
All
like
the way
a couple
to the
feet?
bottom.
All the way to the core.
Yeah.
Yeah, all the way to the core.
All the way to
Okay.
hell, as they
all,
say.
all the way to the core.
Yeah, we
Okay.
call the ownership a fee title heaven and hell.
Okay,
Yeah, so
got it.
that's how it is. Yeah.
Oh, interesting. Okay. Okay, cool. Anything else on the preliminary title report that we should be looking at for buyers in terms of red flags? That's important.
I think when you read a covenant condition or restriction, it's kind of, you need to, as a buyer, understand what the property restrictions are. So if somebody's wanting to develop in the future, they might want to look and see if there's any restrictions for the development.
That's for HOA communities, CC&R communities.
Well, the
Could be,
crazy thing
could
is
be, yeah.
HOA, CC&Rs are recorded everywhere, not just HOA, areas. So they recorded, like I said, the developer created a community and he wanted to have some kind of symmetry. You can't paint your house purple or whatever, kind of things. But, it's everywhere. It exists on every single family resident, not just in HOA communities. Yes, it's more prevalent in HOA communities, but not just in HOA communities.
And so if they're on there, they're really old, and do people still abide by them?
Well, it gives the opportunity for one of the other homeowners to actually enforce them. So if someone does, say they put up a second story and they weren't supposed to put up a second story because it said the restriction was restricted to one story.
In 1903.
So a next door neighbor could come back and say, hey, you just blocked my view. These CCNRs say, I can't do that. You can't do that. So yeah, it gives them the opportunity to enforce them. In an HOA community, of course, that's enforced by the HOA.
Right.
Oh, interesting. So the next door neighbor can enforce it by calling a title person and be like, yo, look into the preliminary title report for my next door neighbor. He just built a second story.
Yep. But in LA, there's a lot of HOAs that not HOAs. Those restrictions are not, I should say, enforced all the time, because in these communities where they're building second levels, and some of them, they have certain areas where they had HOAs that have not really. It's a voluntary HOA. And those are the ones that would say, no, we can't build a second story. But there may be, say, in the CC&Rs that it may say that, but then someone's already done it, or the whole neighborhood's already been converted over. It's also the building and safety allows it. So where's the fine line? I mean, that's,
so you guys see that a lot then on
We see it a lot.
CC&Rs. Okay.
that's the only reason I'm saying that, because
Sure.
we see it. And according to the CC&Rs, maybe it wasn't supposed to be up there, but
So buyers should know,
Buyers should be able to read 'em.
and there's a risk.
yes.
There's a risk.
100%.
Okay.
The risk. And we definitely we have a claim where a buyer bought a piece of property and they wanted to develop the land, and they read the CC&Rs. They saw that there was a restriction for a second story, but like Mark said, there was other properties in the community that had second stories. So that buyer took a gamble and decided to put a second story on, and they got sued. I think they're still in court, but they got sued for it. They came to us for the claim, and it was like, unfortunately, it was already in the CC&R, and we showed the exception of it. That's when we can't handle it, because we've already showed it to you, and you as a buyer took that risk. So yeah, that's the risk they take, and we've seen it. And they get in court and have to deal with it one way or the other. Either they have to tear it down, or they have to negotiate to see if they can keep it.
Yeah. Wow. Okay. Cool. Anything else that you guys can think of as in terms of red flags for buyers when they're looking at the prelim?
I think we kind of covered it all there.
I think the buyers should really either, if they don't want to go through the CC&Rs, maybe have an attorney do them, to go through them. Or sometimes when we're involved in a transaction, most title officers and stuff don't want to review the CC&Rs, but Bill will gladly do so most of the time.
Well,
So-
what's great about you guys is that when I'm repping a buyer, or even this, as a listing agent, I have my buyer and me get on a conference call with Bill and go over everything on the prelim.
You do.
Because it makes the buyer feel more comfortable. And I'm not a title expert. I'm a real estate agent, so I want to defer my knowledge to somebody who knows more about the title insurance stuff, and the prelim, and that's you guys.
Thank you. We
So
appreciate
you guys do a
you
good job
coming out.
on doing that. So if there's a title issue, like I buy a house, right? 6 months down the road, I find out that my ADU is encroaching on my neighbor's property, and I was never told. It was never on title insurance. So what happens next?
So then the homeowner, the new homeowner, the persons that we insured, needs to reach out to us so we can file a claim. So they'll file a claim with us, and then we'll file it with the underwriter, the actual insurance company, and then the process will start to get the matter resolved. It may take them moving it, tearing it down, moving it, or like I talked about earlier about maybe getting a encroachment agreement or some easement or some sorts. But reaching out to us as quick as possible is probably the best thing to do because we get the process going for the claim.
Okay.
And was it permitted by the city? That's a big thing. Because a lot of these people, they start the ADU process and through the city process, and they go, oh, I'm just going to finish it myself and put So those are the red flags when we do get a claim. Was it permitted? Was it done the right way? And then we'll pass it on to our underwriters, and they'll take it from there.
What is the most common claim that you guys see in title insurance?
Mechanic liens.
Mechanic liens, okay.
Lately, it's been mechanic liens. And a close second is easements, missed easements, or someone inserting an easement, right? Saying like maybe they were trying to, they forever have been going down this way with a road that never existed. So now they're trying to enforce a prescriptive easement. So that's a close second to mechanic liens right now.
Okay. All right. So those two ones. Before we go into the last question, we were talking about trust, right? And the complications of trust, right? You trust, somebody passes away usually, and now you have an entity, which is the trust, and the entity could have 5 trustees, 10. I mean, it could be as many as you want, right? But usually it's in between, 1 to 4 or 5, right? And so what are some of the common issues that occur with trust in terms of title? And then how can we resolve them? Or what can we do before we sell a property to help a trust make sure that everything's clear so that there's no issues during the transaction?
For one thing, you as an agent should get the full trust from the seller to us for Bill to review. Because a lot of times we'll have people or real estate agents, not saying that you would do it, but certain real estate agents meet someone, they want to sell the property, they know it's in a trust, and it's Joe Bob. Joe Bob's parents have passed away, but there's successor trustees. Joe Bob wasn't the signee of the trust. So those are the situations where you got to be careful. That's why we like to get a full copy of the trust. We send it to Bill to review, and then you could go back to Joe Bob and say, listen, your brother and sister are also involved. Are they signing for you? And so with that, reviewing the trust, it may say, yeah, Joe Bob can be the only signee as well. So those are why trust and reviewing them are super important. Does that make sense?
That's right.
Why isn't the trust document recorded? Because what if it's
deed is.
lost?
There's a lot of privacy in it, so nobody wants to put it a public record. So, especially when it comes to beneficial interest and what's happening. So somebody will give them gifts like maybe money, maybe cars. You're talking about the properties. They don't want that out there public record, so that's why they won't record it. So it always goes as an unrecorded document. Not that it can't be recorded, but I think there's a lot of privacy that you want to have as a trustee or a trustor who owns the trust.
Have you had instances where they lost the trust?
Oh, many times.
Yeah. And so then what happens then?
We need it.
No. What
Does
happen is it has to
does
go to
the-
probate.
That-
It has to go to
It has
probate.
to go to probate. They got to go prove to the courts who's the trustee, who are the beneficiaries, and we have that often. We have that happen often.
It does happen.
So the big difference in between a trust sale and a probate sale, correct me if I'm wrong, is a trust sale is the owners created a trust so that when they pass away, right? So like I'm married with somebody, we create a trust, we pass away, and then that trust says that our kids are the beneficiaries of our trust,
That's the
right?
trust act.
And it's an easy transaction for them,
Right.
and it's simple. And there's different ways to create the trust, right? Sometimes I can have my son be the one that is the executor.
Yep.
And then my daughter, who's maybe much younger, or maybe I don't trust her,
Right.
she'll get half, but she's not the one that's making the decisions.
Happens
So
often.
so the trust attorney who's working with the people that are creating the trust are asking all these questions, so that when that person passes away, then there's a way to handle that. But if there's no trust, then it goes into a probate, right? So then if I pass away with my wife, and then I have 2 kids, and it goes into probate, then what happens there?
Well, that's where the courts then oversee the whole. If you have a will, they'll oversee the will. Not if it die intestate without a will, then basically now you're gonna have to get testimonials or whatever from owners or anybody challenging the estate. So it could be a process. It could be as simple if you have 2 people and that's it. And they're all in agreement with everything. Could be real quick. But some of them can get really challenging. Like I said, someone could come out of the work and say, "Hey, my Uncle Paul, he gave me 5% of this this property." So that's where it starts getting really complicated. So
And do you have to prove it with like a document?
yeah, the prove it.
Could it be
in
like
courts one way
could it be
or
like
another.
on a napkin, Like, hey, look at his signature.
They'll go to the
right?
courts and contest it. And if the courts believe him and he verifies that his uncle gave him 5% of the property at one point in time, then they'll either award it to him or not, or they'll award it to the 2 kids that were the son and daughter of the parents that passed. So they'll go through the court process, and that's what the probate process does. It vets everybody that has claim to that property. So it's
So you always advise for a family to create a family trust.
I think it's always the best. I mean, we won't advise that because that's not our position.
Sure.
That's probably best ownership is owning in a trust. I mean, you could hold husband and wife as community property, but like you said, if let's say my wife and I are actually flying together somewhere and we both die in some kind of plane accident, now all of a sudden you're dealing with just whatever's in the will, right? And if we didn't have a will, then you're dealing with the courts, trying to decide who's supposed to get what. So I do say, hey, protect yourself and your interests, and make sure you take care of your beneficiary, your loved ones, and get a trust. That way, it outright tells you what to do. Now, that doesn't mean that can't be challenged either at one point, but at least you have more protection with that trust.
And what's the difference in between a will and a trust?
Well,
I
that's
mean, they're both legal documents,
correct.
created by a lawyer, right?
Correct. But the trust, in essence, gets memorialized by the transfer of a deed. Like you're going to transfer it to Bill Thomas as trustee of the Bill Thomas Trust.
Yes, okay.
So as in the will, it's just Bill Thomas. That's it.
Okay, gotcha. So the will is not recorded
It's not memorialized.
on the with the county.
Correct.
Okay, understood. Okay, cool. Anything else about trust or issues with that? I mean, I guess the biggest issue is when you're dealing with a trust sale. Dependent on who the trustees are, if they get along, or if they don't get along, that's where the issues arise.
Correct.
Okay.
Correct.
Okay.
And it doesn't mean that the courts can't intervene in the trust factor, because we see it all the time too.
Mm-hmm.
Beneficiaries fighting for stuff, and like I said, Uncle Paul was supposed to give me 5% of that, trust asset or whatever. So
and they
it
can
happens.
contest all that. They can they can contest the trust if that's
It's typically seen.
and
So.
it's generally seen when it's a bigger estate, where they contest certain properties, or I was supposed to get this one, you were supposed to get that one. So that's when we see kind of stuff like that, and the courts get involved, and we deal with a lot of trust attorneys through that. So.
Okay. All right. Sounds good. I think that's really it. I guess the last question would be, how, there's a lot of insurance companies, right? So when we think about insurance, we think about like Allstate and State Farm, right? But when it comes to title insurance, there's not like a million companies out there. I mean, maybe there are, but there's only a few like big ones. You guys are California Title, but you guys underwrite. You guys are like brokers, basically, right?
Correct.
In-
We're an
in a
agent.
way?
Yeah,
Yeah.
In essence, you're correct. We're an
Okay.
agent of underwriters, correct? And we
Okay.
have 6 of them.
So
that
who are
helps
the
us.
6 that you guys work with?
First American,
Okay.
Old Republic, DOMA, which used to be formerly known as North American, Stewart Title, and then TRG, and then also Raytech, which is our in-house underwriter. We
So
have
you guys have a lot.
A
Yes.
lot.
So you guys pick which one you guys underwrite with? How does that work?
It actually works in different ways. So sometimes it depends on the transaction. If the transaction really calls for this underwriter to really take in the insurance, and what I mean by that is the transaction could go to the wheelhouse of that underwriter. Like we'll have one underwriter who is really good with construction transactions, so we'll take it into them. We also have transactions where we have senior rates for certain people, so we got to take it to that underwriter. So it depends on who it is. A lot of times we get a buyer who is actually represented by an attorney, and they're going to I want a nationally known underwriter, like someone like First
And we could do it.
And we could do it. So it depends on that situation. Usually it depends on the transaction, depicts whose wheelhouse is that in.
Yeah. Okay.
And it also helps us with the cost factor for the seller. So we can shop those 6 underwriters within our own company if you need it. We have the senior rate, we have the military discounts, first-time home buyers, and there's only a couple underwriters that offer that. So we're lucky that we have those to pass on to the consumer. And that's what we're trying to do is when we try to find the wheelhouse that works the best title coverage for the seller or whoever it may be, is some of them are a little more difficult. Some of them have more challenges. You know, if we have to go through the trust or if we have to do certain things, those are the ones Bill's saying where he knows those underwriters the best, and he'll be able to say, we have to plead our case sometimes, you know, to make it work, to make it close, for them to say, okay, you know, we'll close with that underwriter. So it's a great way to be able to leverage what we have.
Okay,
you know.
cool. Awesome. Thanks guys for coming. I really appreciate it. I think we covered everything.
That was awesome.
Anything else that you guys can think of that we haven't covered? But
I think that was good.
I
I
think we're
actually,
good.
when I got your questions today, I'm like, those are really good questions.
Well, I know when Mark asked me, he's like, Paul, we got to prepare. I'm like, you guys will know everything I'm asking you because this is your business. I'm not asking you anything crazy, like strange. But I mean, I understand it. You know, when you're going.
We've been doing it a little longer than he has. So.
Yeah.
But I thought for sure because we were talking about it first. We were talking about probate, right? So I was ready. Okay, what questions of probate are you going to ask?
Yeah, I think we first started talking about this. It was talking about like trust sales.
Oh, okay.
And understanding how you do your trust sales. But I think this is good for any consumer out there that is looking to understand more about the title part, because when you're buying a house, there's so many things.
So many.
You have
parts.
Title, you have your lender, and all that underwriting stuff, which is really complicated and it's just stressful, right? And then you have all the inspections, which is very stressful. And then you have a home warranty, and you have, I mean, there's just on all the documents nowadays.
You being a real estate agent get to deal with it all.
Yeah, that's true. Yeah, you're right. I mean,
we get to handle our problems.
Oh,
you
yeah.
get to do it all.
Oh yeah,
The therapist.
It is true. It is true. I mean, I think that is lost in our industry, is how we have to handle so many different people. You know, from
100%.
From 5 to 10 different inspectors, to title, to home warranty, to lender, to the lender's underwriter. I mean, it just goes on and on.
And
right?
following your timeline. when you need
Exactly.
things to
Yeah.
close.
Yeah.
Absolutely.
This is why we get paid what we get paid, right? Because we work hard, and we understand the different scenarios that can happen, and we try to avoid those things as much as we can. And if they come up, we've dealt with them already, because I have a lot of years of experience, and you guys do as well. So it's good to have guys on my side like you guys. So I really appreciate you guys.
Appreciate you.
Thanks, Mark.
Thank you.
Thanks, Bill.
I thought you were a lot older. You look
Appreciate
so
it.
much younger.
Oh, yeah.